Hello everyone, it's Irfanali Moladina with RMI Professional Corporation. I hope everyone's having a fantastic month of October. And as we get closer to the end of the year here, I want to touch on a question I get asked quite often from our clients. And that is, as the year end comes closer, should I start buying some assets to reduce my taxes? And this has been a big rumor around there. A lot of people believe in this. However, I want to dive in a bit more and to really see what the effects are. So what typically happens at the end of the year is if you start to buy an asset as a small business, you only get to write off a portion of that asset. So for example, you might go buy a $100,000 piece of equipment, and depending on what type of equipment it is, we'll only get to write off a certain portion of it. So say it might be only 20% for that year and the rest will carry forward. But what CRA has done actually is in the first year and the last year of the use of an asset, we only get to write off half of the actual amount. So if you went and bought a $100,000 piece of equipment at the end of the year, it's actually only going to give you a $10,000 deduction against your income, of which if you're a small business, you might be at the small business rate of 11% here. So you're going to see a savings of $1,100. So there is a big misconception that if you go buy a big piece of asset at the end of the year that you'll see a big tax savings. But I want to caution everyone, be very careful with that. You will save some taxes, but it might not be to the same extent you actually think. Once again, it's Irfanali with RMI Professional Corporation, and I hope everyone has a great week.